What's going on, guys? Welcome back to the channel. Thanks again for tuning in. Today we're covering a highly requested video. How much a stock is going to move on their earnings announcement. If you're not familiar, every quarter publicly traded companies will release an earnings report, and this is going to show how profitable or how much money the company has generated for the quarter. Now, when they release these reports, the stock generally makes a really big move, and it can be very volatile, and it can be hard to judge just how big that move is going to be if you don't know what you're looking for. So in this video, we're going to be showing you how you can use the options chain on TD Ameritrade, Robinhood, and Webull in order to predict how much stocks are going to move during their earnings report. And again, the really great thing is this works on any platform. You just have to be able to look at the options chain. So we're going to go through TD Ameritrade, Robinhood, and Webull. So the first one we have up on the screen, this is TD Ameritrade. This is what the inside of the Thinkorswim option chain looks like. Before we go further, what I'm going to do here is I'm going to pull up Robinhood, which should be, is it this one? Where are you at? There it is. So this is the Robinhood option chain. As you can see, it's not quite as intuitive of Thinkorswim, but that's okay. That's really Robinhood's whole motto, is simplistic and very basic, which is completely fine. The next one we're going to look at here is Webull. Webull, as you can see, it's very similar to that of Thinkorswim. It's significantly more intuitive, more advanced, and more complex than that of Robinhood. So if you're a beginner and you're really just getting your feet wet, then something like Robinhood might be better, but I wholeheartedly feel you should probably just avoid that in the first place and just jump into using something like Webull. The platform is free, there's no commission. There's also a link in the description if you haven't already joined them to join them and get a couple free stocks when you sign up and deposit a little bit of money. So I would highly suggest you just jump on and use this platform and really just start learning on a more intuitive platform, because it's really just the way to go. So what we're going to do now is we're going to show you how you can calculate the move of any stock that's going to report earnings. What we're first going to do is we're going to jump back to the Thinkorswim one second. So here's the Thinkorswim platform. This is the option chain. This video might be slightly hard to follow because I'm making it on a Friday. And since there's really no companies reporting earnings after hours today, it makes this video slightly more challenging to follow along with, but I'm going to do my best to make sure you're not confused. So whenever you're following a company, so let's say next week you're following any company that's going to report earnings, what you do is you go into the option chain of Thinkorswim, Robinhood, or Webull, or any of the platforms that you're using. Now what you're going to do is you're going to open up the earliest expiring option chain. So in this case, today is August 6th. It's a Friday, which means that these options here for Apple stock are going to expire today. The August 6th option chain will be gone after today. Come Monday morning, the new option chain in line, earliest expiring options chain, would be August 13th, okay? So this is the new options chain that you would use for next week to predict any earnings movement for any stock you're looking at. So the way that you do that is that at the end of the day, before market close, couple minutes before, if you're looking at Apple, Facebook, Nvidia, Google, doesn't matter, you look at the earliest expiring option chain a few minutes before market close on the day the company will report its earnings. From there, you're going to go and you're going to get the at the money call, which in this case is on the left side, and you're going to get the at the money put on Thinkorswim. It will be the right side. Okay? You will add the cost of both of those options together. Whatever that comes out to is the implied move that the stock is expecting to make on its earnings announcement. So real quickly, I'm going to pull this calculator up. So let's just say, for example, that today was the day that Apple is going to report earnings after hours. What we would do is we would take this call, which is priced at $1.99, and I'm just using the ask side, okay? Then we would add that to the put, which over here is $1.47. That comes out to a total of $3.46. From there, you could expect that Apple, once they report their earnings, should move a value of $3.46 from wherever it kind of is once the market closes, okay? There is an easier way to do this when you're using Thinkorswim. Rather than having to add the call and the put to figure out the value, you could simply look to the upper right-hand corner if you follow my cursor, and you will see right here, 336. So what they're saying is the implied move for Apple would be $3.36, whereas my calculation was $3.46. And the reason there's a little bit of a difference is because I added the ask of the call and the ask of the put together, so I'm going top dollar on those options to get my value. Whereas the implied move here is probably just calculating from about the middle of the spread on the call to the middle of the spread on the put, therefore creating a little bit less of a value that I came up with. All right. Now what we're going to do is we're going to jump back over to Robinhood. Okay. So we're looking at Apple. This is the same thing. We're looking at the August 13th expiration. Okay. The difference here with Robinhood is they don't show you the calls and the puts side by side. You actually have to toggle this switch up here to get to a call or to a put. So for example, in this instance, you can see here the call for Apple 145 August is at a cost of $197. If you look here on TD Ameritrade, the cost for a call on TD Ameritrade there is $198. So it probably just hasn't updated here on TD Ameritrade, but hasn't updated yet on Robinhood, but that's okay. So again, between Robinhood and TD Ameritrade, you can see the calls are pretty much the same price. From there, you would go over to the put, and you would figure out that the put is priced at $1.46. So I don't see here on Robinhood that it gives you the implied move that TD Ameritrade does in the upper right-hand corner. So this is when you would use the trick of adding together the at-the-money call and the at-the-money put if you're a user of Robinhood to get the implied move for the earnings announcement on whatever stock it is you're watching. All right. Now that we're good on Robinhood, we're going to pop on over to Webull. So again, here on Webull, I'm not sure if it shows the implied move anywhere here. Again, I don't use Webull as often as I use TD Ameritrade. So if there is a section where it gives the implied move, I might just not be seeing it, and I'm sorry if I'm missing it. That's okay. If in the event it does not exist, you would still go with the same process as you did while using Robinhood. You would again take this is August 6th, so we want to change this to August 13th just because that's how we've been working, the date that we've been working with throughout this video. So again, with Apple here on Webull, you would go to the at the money call and you would go to the at the money put. You would add those both together, and whatever that value comes up as, that would be the expected move for Apple at market close when they report earnings. I wish there was more that I could show you. If there were companies that were reporting earnings tonight, I could map out all the levels for you, and then you could look at them yourself later after the company's report. But again, this is Friday, which means there's no reports happening. So what we will do is we will go look back at the last example that I have done with this with traders on YouTube just a couple days ago. So I'm going to minimize Webull. We are going to get out of the option chain here, and we are going to go and look at the stock SPCE. All right. So we're going to pop on over to SPCE here. All right. And we're going to go back on a 180-day chart. All right. So if you use TD Ameritrade, whenever you see this little blue circle the blue and the red circle, that is there to let you know the company's reporting earnings, right? So anytime you're using TD Ameritrade and you see a little blue and a little red circle next to each other, that's the date at which that stock or company will report their earnings announcement, okay? So yesterday, before the company SPCE reported its earnings, you can see I have a bunch of green arrows here and a couple red lines. So yesterday, before market close on SPCE, what we did in a live stream at about 11 in the morning was we taught people this strategy. And the strategy was to add up the at-the-money put and the at-the-money call to get a value to figure out how much the stock should move when they report. So the value that we came up with for SPCE, now granted, this was at 11 in the morning. And as I mentioned, you want to do this right at about market close. So the two levels we have on the chart were probably slightly off because we did it so early on in the day as opposed to later in the day, right before market close, when it probably makes most sense to look at that. Okay? So now what you can see is we have the red line on the top and the red line on the bottom. So at 11 a.m., after we added the at-the-money put, at-the-money call for the stock SPCE, I forgot the value that we came up with, but that value we came up with created a resistance up at the price of $34.29 and a support down at the price of $29.12. So whatever that implied move was, or that calculation of the put and the call, that allowed us to put a support and resistance at these two prices. You will then see, if we just kind of go and look at an intraday chart, you will notice that the earnings announcement yesterday after hours, before I go further, we did the calculation at about here. So when SPCE at about 11 o'clock was trading here, that's when we added the put and the call together. And that's what created this red line up here and this red line down here. So whenever you get those two red lines, like I just suggested, that's where you can expect the stock is going to move in after hours on their earnings announcement. Again, just as a recap, maybe I can make it slightly more clear. When we added the at-the-money put in the call, it gave us a value. So at market close, whatever that value is, you go up to. So let's say SPCE closed here, which it did, at $31.58, and the move was expected to be $3. You would then go all the way up to $31.50 and $3. So you go all the way up to $34.50, which was like about there, and you would put a line, all right? And then you would go all the way down from when it closed. You say, okay, it can move $3. The price is $31.50. Let's go down $3. That brings us down to, whatever, basically $28.50 or whatever it is, okay? So from there, you'd mark off your two lines, and that's where you can expect that the stock is going to move to in after hours trading. Now, I wish I was smart enough to tell you guys exactly how you can determine which way it will move first, but I just don't know how to do that. But if I ever figure it out, to be sure, I will let you guys know. So this is usually the way that I go about using this strategy. On the day that the company announces earnings, you go into the option chain, do the whole put call thing, or you just look at the implied move, figure out what that value is, come back to the stock chart, add a support and a resistance based on that value that you've calculated. Then from there, what I typically do is when trading these earnings move, I don't try to catch the first big initial move. I just generally wait for the stock to move to what the expected move is supposed to be, and then either trade the market on a short, bearish, if it goes up, or I trade it long on a bounce if it sells down. Now, a lot of times, that's the case it's going to happen. The market will move to one of your price points, and then it will bounce. In the event that it does not bounce and it keeps going, that generally means that the earnings announcement was worse than expected or better than expected, to the point the market is willing to continue selling it down and or to continue buying it up through that expected move. Let me repeat that. When you put those values on your chart, if the stock goes further than it on the downside or the upside, that generally means the earnings report was way better than anyone expected, hence why the price goes further than the implied volatile move that was expected. If that makes sense, go ahead and smash the like button, hit the subscribe button. That's all we have for you in this video. I do appreciate you guys tuning in. If this is your first time tuning into the channel, just know we go live every single day, Monday through Friday, from about 8 a.m. to 11 a.m. through market trading hours to help give you guys real-time market analysis every single day. So with that being said, I'll catch you guys on the next video. I appreciate the support.